Well, aloha everyone, Joshua Hayes at bigwavetrading.com. In this video lesson, we're just going to review the overall market right now. The setup is not ideal. The SPY, actual price action, price is all that ever matters to me, first off. I only obey and follow price. It's the only thing that affects my profit and loss. But the price action I'm seeing in SPY right now is not indicative of a healthy current move higher. And we'll go over some oscillators, indicators, and internals to prove this. And then I want to go over a lesson. I had one of my worst trades in 4 to 5 years this past week. And I think that we can learn a valuable lesson from it because I broke multiple rules again. It's the second time this year I've had a beyond a quote max loss trade. And with my methodology right now, with the way the market is working, I need to trade perfectly because my huge winners, the big winners, they're not moving up in a nice, steady, trending fashion like they used to back in the day. So with the way that I trail my stops up, it allows me to constantly take profits on the way up because you never know when a stop's going to top. But some of my best winners this year, since this uptrend has started in October 2019, has just been a very choppy, volatile experience. And that can just be seen in the price action, the indices. You will notice nowhere during any of this uptrend off the December low is there any calm, ebb and flow, rounding price action as we move higher. Even if there's a violent pullback, there is then no steady sideways consolidation before a nice rounding move higher. Everything is violent, 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 violent. V-shaped moves up and down. And it's starting to become really noticeable lately because we are in the middle of February. This is seasonally and historically the third worst month for equity returns. August and September are the worst two. February is the third. So with that in mind, still in the middle of earnings season, we need to all be careful here, and I'll show you why. Now, I want you to notice something with the SPY. As we've made our moves higher during this rally, we've seen the momentum. This is the TTM squeeze, but right now I just want you to pay attention to the momentum lines. You'll see that momentum was strong on each push. It was a little slow to get going here, but we stayed above the zero line, even during the pullback, and then we pushed higher with pretty strong momentum. We dipped below the momentum line here, but when we turned back higher above it, we stayed strong and rallied on. We did this each and every time that we rallied. Now, on the most recent move higher, I know it's only starting, so it's not like it can be super powerful. You will notice this time around, though, we have a series of lower highs in the momentum, and with the market hitting new highs, for the first time, the market is not hitting new highs with momentum already gaining bullish traction before that move to new highs. SPY's hitting new highs. Only now is momentum going positive. That's indicating weakening momentum on the moves higher. Doesn't mean anything yet, but it's a warning signal to me. So this is kind of a clean chart. But I want to show you what, because I always pay attention to the SPY. The SPY is the most important index. But then, you have the DIA, where once, it's near highs, no momentum. You have the QQQ, which is actually leading this market higher. And yes, it does look fine. But remember, the QQQ, similar to the DIA, it's only so many stocks. There's only about 100 stocks in this index. Now let's look at the most broad IWM. If you look at that, you'll see things do not look so good. It looks actually really, really, really bad. So the IWM, we are not at new highs. This V-shaped move is already failing at lower highs. And just look at our momentum indicator. It's weak, and it's still weak. So now I want to switch over to these charts, which it's more noisy. It's going to be more noisy, but it also just want to keep things in mind and perspective. As we've rallied in the IWM, gosh, this chart's really noisy. I'm sorry, everybody. You can see the MACD line weakening. And right now, it's only about the zero line, the RSI line weakening. Stochastics weakening, weakening. New highs here in the index, lower highs in each and every one of these indicators. Time segment volume has rolled back over. It's kind of getting back above the signal line, but now it's weakening again. And the most important one that I kind of track, the price percent oscillator, PPO, still weak, still negative divergences, doesn't look good. Now let's look at the SPY. The SPY is hitting new highs, but the MACD not confirming, RSI not confirming. Stochastics looks pretty good, no lie there. So I've got a kind of a mixed indicator signals here. TSV is lagging, but hey, at least we are above the signal line. PPO, at least we are above the signal line. We are green. So we have mixed indicators here, which indicates to me that at the very least, we should expect some chop moving forward in the indices. Is this a death knell on the market? No. But I want to show you now one of the most important internal indicators I look at that for the first time during this entire uptrend off the December lows is not confirming the move to new highs. So what we're now looking at here is the New York Stock Exchange advanced decline line. Now, this is only on a daily chart, and it's only going back so far, but trust me, this entire year, each time that we've hit new highs in the S&P 500, this line has either hit new highs before we've hit new highs or has confirmed the S&P 500 as it makes new highs. It's done this the entire uptrend. This is the first time the S&P 500 is making new highs, but this index, internal indicator, the New York Stock Exchange Advanced Decline Line, is not leading the market higher or confirming. There is nothing to worry about here yet. There's no real issue here yet, but this indicator, the last time it did not confirm a move to new highs, the summer of 2018. Markets were hitting new highs. New York Stock Exchange Advanced Decline Line was not. The IWM was not. There was some negative divergence out there, and it led to a major sell-off. And the Russell 2000 has lagged relative to the S&P 500 ever since then, and it actually started in January 2018. No surprise, my personal trading has, while it's been profitable, has not been, I'm not happy with it at all. And it all started around January 2018. It led to my good to cancel buy stop limit orders being set up after the summer of 2018, wiped away a fair amount of gains that were built upon that year. And it's led me to the current market where lately it's just been really everything that I get filled on does nothing. Every order I set up good to cancel buy stop limit that triggers and doesn't fill. Like, I'll review a few of them. So let's just skip that. I'll review a few of those here whenever we go to Telechart version 7. But the bottom line is this indicator's lagging, but my number one top indicator, it has either led or confirmed. Remember, it dipped big here, even went below its 200-day moving average and came all the way back up. So I want to reiterate, this is not a death knell on this market. It's not saying that this uptrend is over, but these are huge red flags and warning signs to say, be careful short term. Right now, this is not the time. I do not love any of my long signals that I'm getting. And I've been complaining about that for weeks now, before the market pulled back from the coronavirus. Leading into that pullback, I was complaining about the quality of the long setups. They deteriorated rapidly. They weren't safe, per se. They didn't have that juicy, coiled look to them. And then hence here we are. But this time around, the New York Stock Exchange Advanced Decline volume line is lagging significantly. And it just goes to show, what it's basically saying is that whenever stocks are down compared to stocks that are up, they're doing much more volume than the stocks that are up. So that's why you got this big lag. Doesn't mean that if the S&P 500 keeps rallying, this line doesn't go to hit new highs. It just means, hey, this one isn't as healthy as the previous ones. And that's all it's saying. We're not as healthy here as we used to be. So keep that in mind short term as we're moving forward. If the market pulls back, I'm ready. I still have some hedges out there, but I got to admit, got chopped out of a lot of them with that move to new highs. Took me out of all my S&P 500 hedges. Still have SOX X, SOX S, still have TVIX,
but got chopped out of most of them. Now, with that being said, I want to now go over some of the trades that have happened lately in the end-of-day account that's just really been annoying. So lately, in my personal trading, there's been a bad habit of the stocks that are triggering and filling on my end. They're working, or they're cutting losses small, or they're not doing anything. But if I have an order out there for something like this, order was placed on this day. This was the signal day. I know it's hard to see, but volume is heavier than the session before. Max Green Bop, multiple scans that it's in on my end that look for certain things. Right off the 50-day moving average, 201 is my entry. Well, on this day here, it triggers and doesn't fill because I don't give myself any offset. And of course, what does it do? At one point intraday, I can't quite remember, but I believe that this thing was up it was up over 50%, might have been up around 75%, but still, it triggers and doesn't fill. Oh, whatever, that's annoying. Then DNLI. This is the long signal here. The 24 level is my limit and stop. It triggers, doesn't fill. Intraday, it moves almost 10%. Annoying, right? And then on Friday, COE. I knew it was thin. Made it as a speculative long position for platinum members only because I only knew there's going to be so many shares to go around. 1487 was my stop, and I gave myself no offset on the limit, and I tried to do 1487, perfect entry or no entry, especially when I'm risking all the way down to here for my cut loss level, which is 1244. Now, the thing is, you just had change your size. You would change, so instead of putting 5% into this, you put 2.5%. You modulate and you adjust to make sure what's at risk is a loss that you can handle. I did do that, but of course, COE, triggers, doesn't fill me, moves 20%. Everything else that triggers and fills, of course, like I said, it doesn't do that well. Now, one that has been doing well, whoops, always press the wrong buttons with TCV7, is ELA. But here, once again, here's a place where I could possibly get 3%. This day right here would have been a new long signal if it would have closed near the highs. The next session would have been a new long signal if it closed near the highs. Heavier volume, increasing green bop. Nice chart pattern, especially on a longer term time frame. Look at this coiling. What do we call this? A volatility contraction pattern is what it looks like to me. Oh, what is that? Interesting. Got to check that out. Don't know what that means. But anyway, so this is the long signal here. So instead of having a 3% long position, I only have 1%. Next thing you know, bam, new highs. We added to it here. It worked out in 3 days, up 19%. But the point of this video is, of course, whenever I want to get long something and I really like something, I don't get filled. And then when I make a blunder, I really pay for it. TNXP, long signals here. This day, the 16th. Add signals here. This day. Another add signal here. I don't take them all. Don't get filled. Add signal technically here. And then this is the worst one, I think. That's the one that filled that I didn't want to get filled. This add signal fills me on this day right here. Now, TNXP, thanks to the way that I trail my stops and how tight I keep things, it ended up only being a 1.5% position before the sell-off. But that being said, I knew phase 3 data was coming up. Look at this chart. Look at the biggest volume bars. Look at this nasty intraday reversal. Look at this huge volume and nasty intraday reversal. Look at this huge volume and nasty intraday reversal. Notice during any of the accumulation roundabout phases, there's no heavier above average volume. I knew that. I saw that. I knew phase 3 data was coming up. But for some odd reason, I thought this chart had that look. That look as if you get long and then all of a sudden overnight it gaps up to $4, runs to $8, $10, and you take profits the whole way up. That did not happen. And that's what happened to me. Worse off, I had a game plan of I'm going to sell half at the market at the open, hold the other half, and if it happens to rally at all intraday, I'll start piecemealing my way out to mitigate the losses. But instead, in the morning, it was making me so sick, I just sold it all at 70 at the open. And as you can see, it rallied back to $1.10. But hey, good thing I sold it all because look at what happened on Friday, which just proves my point. When you're wrong on something, just get out. But here's the thing. Never try to be big wrong. What am I thinking? I overrided my system on ACST and took it at the market before it ever triggered and filled me above 230. Should have never been in this. Warned everybody against this stock. Saw this day here. Knew about its phase 3. Still took the trade. Big loss, but it was only on 1% of the position. And I realized I made a huge mistake by buying ahead of phase 3. But did I learn my lesson? No. Why? Do you think I've learned my lesson now, everyone? You better believe I have. I will never go long a sketchy stock off the lows before a phase 3 data, especially if we know that it's sometime in Q1 2020. There's not an official date. There's not a hard date. And even then, it doesn't matter. You got to check Biopharm Catalyst. It's a routine that I always do. Anytime I take a biotech stock long, I check Biopharm Catalyst. If there's a phase 2B or phase 3 date coming up and it's unknown and it's in the quarter that I get long, it's not a new long position. But I started to cheat myself, and I got into 2 trades this year that I shouldn't have been in. But TNXP, this was my biggest loss in 4 or 5 years. Do you know what the total damage was, everyone? I acted, personally, like I've lost my entire account. It's all gone. I'm ruined. I did the math. 0.6% of my entire capital. That was the loss. I didn't even lose 1% of my total capital in this name. It was actually more like 0.65%. So let's round it up to 0.7%. But the bottom line is, don't ever let any one stock ever kill you. And the most important thing is, I try to never lose more than 1% per trade. And the most max loss is normally 0.25% of my entire capital with the way I'm trading right now. So it goes to prove, if you size correctly, even if you do have a disaster trade, it shouldn't take you out of the game. Didn't even lose 1% on it. But the whole point is, never should have been in it in the first place. I can understand me buying this one here and then adding to it on this signal here. But all the subsequent signals never should have happened. But the bottom line is, this is the one that killed me. When that 168 good to cancel buy stop limit order filled on this day right here, the day before the sell-off, when it triggered, I knew, uh-oh, I might not have wanted that to happen. Unbelievable. I was correct. All right, everybody, I'm going to go and wrap the video lesson up there. I will see you, if you're a member, in the chat room on Monday morning, but there are friends in town, and we are going to Hana. What is going on with this? I'm going to have to find out what that is. But anyway, I have friends going to Hana, and we got to do it. I will be at Hotel Hana Monday night, so I'll be able to update the site for everybody by Tuesday morning. But Monday, Tuesday, I will not be around. First time in forever. All right, everyone. Have a great week and upcoming trading week. Great luck in your personal trading. If you like the video lesson, please give me a thumbs up. If not a thumbs up, subscribe, ring the bell, leave a comment below if you have any questions or want to talk about your worst trade and how to handle it. If you need any advice, post a comment. I'll reply. Aloha, everyone.